folks, you are welcome to this lecture. In this lecture, we'll be tackling session 2, which has to do with the regulatory, conceptual, and ethical framework under Unit 1, which is the regulatory and conceptual framework for financial reporting. What is our session objective? Now, by the end of this session, you should be able to explain the content of regulatory, conceptual, and ethical framework for financial reporting. And it should also state the importance and limitations of conceptual framework for financial reporting. Now, as explained in session 1, we say the regulatory framework of accounting is a general term used to describe the laws, principles, rules, and regulations that govern the recording of business transactions and the reporting of financial information. Now, these laws, rules, and regulations include generally accepted accounting principles. An example is the International Financial Reporting Standard, IFRS. We have the Acts of Parliament. An example is the Companies Act 2019, Act 992. Then we have relevant legal requirements like the Stock Exchange Regulations. Then we have other international influences, an example being pronouncements from IMF, the World Bank, and the IASB, among others. Now, the IASB is a global body responsible for the issue of international financial reporting standards. And this board was established in 2001, and it succeeded predecessor body, the International Accounting Standard Committee. And this International Accounting Standard Committee was also established in 1973. Now, this International Accounting Standard Committee issued 41 international accounting standards, that is the IASs, and as of now, the IASB now has 45 IFRSs, which include 21 IAS and 17 IFRSs. So you have IAS 1, IAS 2, you have IAS 8, and on. We have IFRS 1, IFRS 2, IFRS 3, and on up to IFRS 17. Now, the main objective of the International Accounting Standard Board is to develop a single set of high quality and understandable and enforceable global accounting standards in order to promote the use and rigorous application of those standards. Now, they also have the objective to work actively with national standard setters to bring about convergence of national accounting standards and IFRS to high quality solutions. That is their main objective. Now, in September 2010, the IASB developed a new project titled Conceptual Framework for Financial Reporting. Now, this replaces the framework for the preparation and presentation of financial statements. This came about in 2010 when the new project, the Conceptual Framework for Financial Reporting, was introduced to replace the old framework. Now, what is the purpose of the framework that was introduced? Now, one has to do it to assist the IASB in the development of future accounting standards and in its review of existing accounting standards. So, in a situation where the board wants to develop a new standard, the framework will assist in doing that as well as reviewing existing ones. Another purpose is to assist the IASB by providing a basis for reducing the number of alternative accounting treatment. So we said the framework has to do with the rules, the laws, and then the principles. So if these things are outlined, it will reduce the rate at which we have different accounting treatment for one particular transaction. So it will reduce that one at the end of the day. Then the framework also, as part of its purpose, is to assist national accounting standard setting bodies and developing national standards. So every nation that has its individual standards that guides its accounting information, the framework will assist the standard setters in doing so. Now, the IASB or the framework also has as its purpose to assist accountants to apply relevant accounting standards in preparing financial statements and in dealing with topics that do not form subject of international standards. So it is not everything that is captured, and in a situation where it has come to the knowledge of the accountants how or certain treatments for financial transactions which are not explicitly stated in the standard, the framework will help the accountant to apply the relevant standard in preparing the financial statement with regards to that transaction. Now, what are the contents of the conceptual framework? Now, the contents of the conceptual framework are basically six. The first one has to do with the objective of the financial statement. What is the main aim of preparing the financial statement? Then we look at the user groups of financial statement. Look at the assumptions underlying financial statement preparation, and then the qualitative characteristic of financial statement. We look at the elements of the financial statement, their recognitions and measurements, and the concept of capital and capital maintenance. So these are the contents of the conceptual framework. Now, let's look at the user groups of the financial statement as the second element in the financial or the framework. We look at investors, and now investors, we are looking at the current and then the potential investors. So they also rely on the financial statement as to decide whether they should continue to invest, and for the potential ones, whether they should come and invest in the business. We look at the suppliers and other trade payables. So they also rely or use the financial statement to see whether the business or the firm will be able to settle their dues as and when it falls due. We look at management as to whether they are managing the resource well and the various policies that must also be implemented. We look at the business contacts like customers. We look at analysts and advisors. They are also users of the financial statement. The loan providers, those who provide some form of credit facilities to the firm. We have the government and the government agencies, and as large we have the general public. Now, one thing we need to understand is that these individuals or this group use the financial statement to satisfy some of their different needs for information. The information need of a group differ from another, and they use the financial statement to satisfy some of these needs for information. Now, what is the importance of the framework? What is the importance of the conceptual framework? One importance has to do with it gives guidance on the broad principles on broad principles how items should be recorded, on how they should be measured, and how they should be presented. So they give guidelines on how we record business transactions, how we measure those transactions, and how they are presented in the financial statement. One other importance is that a conceptual framework provides a point of reference for preparers of financial information where there are no specific standard covering an issue. So in the absence of a standard explicitly stating how a transaction should be recorded, the framework provides some kind of assistance, a point of reference to the preparers of the financial statement. Then, where accounting standards are prescriptive, the conceptual framework can assist the preparers on that. So where the standard provides some kind of prescriptive assumptions and co, the conceptual framework can assist the preparer in getting how this particular prescriptive assumptions or forms must be applied or used in doing or preparing the financial statement. Now, it also assists the standard setters to develop specific accounting standards that follow a consistent approach to recognition and measurement. So the framework is there to help or assist the standard setters to develop specific accounting standard, and this standard that they are developing has to follow some consistent approach to recognition and measurement of financial statement. And they also provide a short-term solution to avoid the long-term process of creating a new standard. So they provide a short-term solution to avoid a long-term process of creating a new standard. It also assists auditors in the performance of their duties. So as an auditor, the framework is also there that this is how financial transactions are supposed to be recorded. This is how they are supposed to be presented. And as an auditor, if you have an idea about this, you understand what the framework states, it will also help you to perform your audit engagements or duties very well. As well as it also assists users of the financial statement. So if you know what is required by the laws, the rules to be followed in preparing the financial statement, it will also help you, the user, to know how to rely on those information if they go by the particular framework. Now, what are some limitations of the conceptual framework? The conceptual framework is not giving us a total 100 or 100% guarantee or assurance. It has its own setbacks. Now, the financial statements are intended for a variety of users, and it is not certain that a single conceptual framework can be devised which will suit all users. As we are looking at the user group, there's each user and the kind of information it requires, and the framework cannot provide the information need or provide a framework that will satisfy the information need of all these users. And the other limitation is that given the diversity of the user requirement, there may be a need for a variety of accounting standards, each produced for a different purpose and with different concept as a basis. And this also comes as a limitation. So there has to be diversity because of the user requirement. Then the third limitation of the framework is that it is not clear that a conceptual framework makes the task of preparing and then implementing standard, which may be easier than without the framework. So as of now, it is not clear that if you have the conceptual framework, it makes the work or the task of preparing and then implementing standards, which may be easier than without a framework. So that is also one limitation that must be known or looked at. Now, what are the code of conduct or the code of ethical principles? And when you belong to a professional body, we have a code of ethical principles that you must go by. And here, the first one has to do with integrity. Now, when you talk about integrity, you as a professional, you as an accountant, you need to be honest and straightforward in all your business dealings. When you talk about objectivity, it has to do with you, an accountant. You should not be biased. You shouldn't allow self interest to override your objective judgment when dealing with when dealing with any professional engagement. Then we have professional competence and due care. As an accountant or as ethical principle, you need to be competent. You need to have the requisite knowledge, the skills that is required for you to do the job you are doing. So as time goes on, you need to upgrade yourself, attend workshop, learn new things that pertains to the profession or the field. And confidentiality has to do with secrecy. You being not disclosing information about your client to a third party without the knowledge of that customer. However, if we have exceptions, in a situation where the law requires, your professional body requires, and it's in the interest of the public, you need not to have that permission because it's the law that requires, and no legal action will be taken against you from the client for doing so. But if out of your own will you went and disclosed that, the customer can take you on or your clients can take you on. Then we have professional behavior. Conduct yourself in a way that will not bring disrepute or discredit the professional body that you belong to. So carry yourself in a manner, in a professional manner that will raise high the image of the professional body that you belong to. So at the end of this session, we were able to look at the conceptual framework. We look at its purpose, the content, the importance, and its limitation. It does not end here. You need to go into the model. You need to read and then try to understand what is there. Thank you very much for your time. See you in the next lecture.